Welcome to the daily insights that matter. Now, just this morning, we got our hands on India's Services PMI Business Activity Index. Now, the Purchase Managers Index, or PMI for services, is based on a survey that involves around 400 service-oriented companies. Now, these companies give their insights and thoughts on what's happening in their businesses, both at present and what they expect in the future. Now, it's quite comprehensive, covering a wide range of sectors such as transportation, IT, communication, finance, insurance, real estate, and various other business services. And you know, in the language of PMI, when the reading goes above 50, it's a sign that the sector is expanding. Now let's dive into the details of the numbers. In September, India's services sector really kicked it up a notch, showing the strongest output it has seen in the last 13 years. Now, the S&P Global's Services PMI for India reached 61 in September, up from 60.1 in August. Now, that's 26 consecutive months where the reading has stayed above 50, which means that there's been consistent growth and no contraction for the last 26 months. Now, even though India's export growth slowed down a bit in the month of September, it is still in the expansion phase for the 8th straight month in a row. And here's a positive sign. The business sentiment for the next year is at its highest that it has ever been since June 2014. Plus, companies are still hiring. This makes it the 16th straight month of employment growth in the sector. Now, overall, these latest PMI results are quite encouraging for India's service economy. Now, let's dive into the discussion about crude oil prices. It's quite a hot topic these days. So, crude oil prices really are a big deal when it comes to the world economy. Lately, we've seen them shoot past the $90 per barrel mark, and it has caused quite a stir in the financial markets. Just recently, it took a nosedive of $5 in what's being called the biggest one-day drop in over a year. Now, why? Well, a strong dollar played a role, and there's this growing concern about there being too much oil sloshing around the world. Now, plus, people are worried about how higher interest rates might put the brakes on the economic growth in the US. And let's not forget about those gloomy manufacturing numbers from the Euro areas and the uncertainty surrounding China's economic growth. Now, all of these factors really put the pressure on oil prices. Now, if we rewind a bit and look at the roller coaster ride of the crude oil prices in this year, it's been all over the place. We started at $82 per barrel, took a dip to $70 in the month of June, shot up to a high of $96 per barrel in the month of September, and now we're sitting at around $85 per barrel in the month of October. It's like a wild ride at the amusement park, right? Now, these ups and downs tell us that the global energy market is in a real state of flux. There's just so much going on, from the balance of supply and demand to all those geopolitical tensions and the overall state of the world economy. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com